You're listening to CFRN, a community of believers who trade for a living. To learn more about who we are, what we do, and how we do it, call toll-free 1-866-928-3310, and we'll send you out a no-obligation information kit absolutely free. 866-928-3310. The CFRN Emini Futures Cast is now on Stitcher. Listen to us on your iPhone, Android phones, BlackBerry, and WebOS phones. Stitcher is smart radio for your phone. Find it in your app store or at Stitcher.com. Stitcher Smart Radio, the smarter way to listen to radio.
Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey, trader, want to get rich quick? Well, good luck with that. If, on the other hand, you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.cfrn.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Bork. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Well, good afternoon. That was about the most bizarre opening I think I have ever heard. If it were possible for a server to be possessed, I think I would probably be calling a priest, and I'm not Catholic, but something is wickedly wrong. Hopefully it doesn't plague us the entire show. Hopefully it was just the intro. I don't know. Okay, all right. Anyway, I'd like to welcome you back. If you're returning, if you're here for the first time, let me extend a very special CFRN welcome to you. We hope you will find what you're looking for if you don't ask for it. And we are in our second decade of broadcast history, so grab the day planner and pencil us in for the next decade, okay? We'd love to have you. Now, we'll move quick today. Lots going on. It's a Thursday, and with everything a Thursday normally brings, like the Partners Workshop tonight and other assorted things, I've got other assorted things on top of that to deal with, so I'm going to give you what you came for, and then I'm going to get out of your hair. Ed Curry will be joining us today at 12:45 Eastern. John will be joining us along the way somewhere, either before or after Ed joins us. If you cannot see the chart I have up right now, perhaps you're just listening to the audio stream, go to our homepage at cfrn.net. On the right-hand side of the page, click the big microphone, follow the instructions. You will be registered all the way through the end of the month. That means you'll have one-click access to the show each and every day. You can also go to youtube.com/cfrn/live. Bookmark that page. You'll have one-click access every single day. I know for a week now I've been trying to get the additional monitor set up so that I would be able to monitor the chat room over at YouTube as opposed to just the one here at CFRN, and well, I haven't. Okay, first I was plagued with radio server issues. Now I'm thinking I got some kind of a bandwidth issue. I hope they're not throttling me because I've exceeded some cap. Cox is talking about starting to do that, and we've escaped it all these years. I guess in my heart of hearts I knew that it was coming at some point. Now, let me just point out real quick on this chart while everybody's looking at it. We got a double top in place here at a weekly trading zone, 2757/58. We hit it yesterday. We hit it again today. We've got one more zone up overhead. Now, that's way up at 2777/2778. So it's 20 points roughly above where we are now. Could it happen? Anything can happen. Embrace all the possibilities. Okay? Now, yesterday, as the show was winding down, we were in this area here. And we talked about what the market could possibly do. And I said it'll do one of two things based on historical observance. After it's finished consolidating in this area, it will either move lower to the zone below, or it will move higher to the zone above. And like a magnet, it drew it right up, and that's where it's been consolidating now for roughly 2 hours. Now, I put a live radio trade out yesterday, and I said, because we were looking a little heavy wherever we were at that time. We would have been back over here. Yeah, we were looking a little heavy, right? But I said, and I pointed out, I go, the previous night, the Concierge Trade Alerts said to consider selling 27.45 on the S&P. Okay? And did that work out well? It worked out very well. And because important prices and important areas are almost always tested, it actually worked out twice. There was a maximum 7 3/4 points available. And then on the second move down, there was 8 points available per contract. I said what we don't want to do is this area here is obviously an important price, important area. Previously it had served as support, okay, and then it was our trigger for this particular trade. I said as price comes back down to this area, I encouraged everyone to look left. It could become support. And so what we don't want to do is we don't want to sell 27.45 and have it come down, spike 27.45 and run the other way. So we're going to put our trigger to sell this time down a little bit lower at 24.71 on a stop. Target 27.38, 1 point above the zone. So we were looking for 3 points with a stop loss of 2 points. Okay, that math works well. However, the market, for all the heaviness here, right? And it did exactly what we said was possible. Come down, spike this area, go the other way. It did. We didn't even bother to put a live radio trade on up here because this kind of looked like what might happen, all right? But instead, it did what we thought could happen, and there it goes. Leg, retrace, leg, retrace, leg, retrace, leg. Just walked right up there, okay? Now, it's dealing with these sellers that kicked it down all the way to 27.37, 20 points. Buyers have now run it all the way back up 20 points. And so we are at a really key area here. Who will win the battle of the day? Buyers or sellers? Will we close today above where we did, or the high that was put in yesterday? Or on the 9th? Today's already the 11th. Be patient and we will find out. So for those of you that were following along with this yesterday, I wanted to bring you up to speed. Now, could we have projected a trade on the other side? We could have. We didn't, though. Okay, we didn't say anything about it. We just said, here's a simple thing. Consider it. If price got down to 41, then it becomes an extremely high probability that it's going to go to 37, and certainly at least to 38. Okay. I wish we had stuck something up here, but we didn't. Just remember, when price consolidates at a zone, what's eventually going to happen is price is going to do its very best to get to the zone overhead, or its very best to get to the zone below. It's been doing that since way before December 14th, 2009, which just happens to be the first time that Michael and I published the weekly trading zones publicly. We traded them a while ourselves, and were impressed enough to share them with the community. Okay, a little spot of news. A lawmaker in Florida has introduced a bill that, if passed, would create a legal foundation for blockchain data and smart contracts in the U.S. state. House Bill 1357 in Florida introduces multiple stipulations that blockchain ledgers and smart contracts be treated as legally binding methods of data storage, provided that such measures do not break any pre-existing laws or regulations. Notably, the bill states that a record or contract that is secured through blockchain technology is in an electronic form and is an electronic record, and confirms that a signature recorded through a blockchain also qualifies as a valid electronic signature. As a result of these qualifications, the bill outlines that if a person uses a blockchain to secure interstate or foreign commercial ventures, it would not impact ownership rights. In other words, if someone used a blockchain ledger to store information, the bill would legally recognize that person's right to that information. If signed into law, the bill would make Florida the latest state to recognize blockchain records and smart contracts. Last year, Arizona passed a similar measure with identical notes on confirming blockchain records as electronic records, as well as giving smart contracts legal force. A slightly different bill was passed in Vermont in 2016, allowing for the use of blockchain-based data as evidence in a court of law. You may all be seated. Oh no, wait, please rise. Now you may be seated. Okay, one more quick little headline and off we go. Billionaire and ex-fund manager Mike Novogratz has unveiled the launch of a cryptocurrency merchant bank. Now some of you might say, well, what's a merchant bank? Your typical bank is for consumers. A merchant bank is for businesses. Businesses that take your credit cards, etc. They have to process them through a merchant services provider. Okay, so this is something that is much needed. So Mike's got a great idea. Novogratz, a former chief investment officer for Fortress, is behind Galaxy Digital, which, according to a January 9th announcement, will constitute a full-service digital assets merchant bank. Described by some as a kind of Goldman Sachs for crypto, Bloomberg reports that the plan is to get the company listed on the Toronto Venture Exchange, TSX, and raise upwards of $200 million. The venture will not offer any services to U.S. residents, according to the release. While Novogratz Group has a plan outlined for the future bank's operation, as well as a partial list of Galaxy Digital's management, the press release noted that the proposal was contingent on being accepted by the Canadian Stock Exchange, all parties completing their due diligence, inspecting company assets, and the formation of a board of directors independent of both Galaxy Digital, and Bradmer. Galaxy was previously set to launch a cryptocurrency hedge fund before Novogratz moved to scuttle the launch in late December. At the time, he cited the challenges involved in managing clients' cryptocurrencies in addition to his own portfolio and other conflicts of interest. He also cited market conditions. Bitcoin has fallen nearly 50% in the previous days, according to a Bloomberg report when he made his decision. Let's look at the numbers real quick, and then Mike will be in to give us a recap of everything that happened today in the live training room, and then Ed Corey will be with us. Here in the U.S., these are the cash markets, not the futures. Currently, the Dow's up 121 points, 0.5%. NASDAQ up 30 points, almost 0.5%. And the S&P 500 up 10.5 points. Last but not least, the Russell 2000 up 19. Now that's 1.25%. So the Russell 2000 is leading the pack. All right. Everything green here in the U.S. In our commodity basket, crude oil is up $1.01. That's 1.5%, trading $64.58 last. Gold up $3.40, trading $13.2270 last. In the Asian markets, at the closing bell, the Nikkei was down 77 points. Shanghai was up almost 4. And the Hang Seng tacked on an additional 47 points. Last but not least, in the European markets, color of the day there mostly red. The only green on the screen for Europe is the FTSE, up 14.5 points at the closing bell. The DAX down 78 points, which is over 0.5%, and the CAC at the bell down 16 points on the session. So that's it. We've got mixed markets in Asia, mixed markets in Europe, but here it's the green, green grass of home. I'll be back with John. I'll be back with Ed. I'll be back with lots more as soon as Michael is finished. Michael, if you're ready, take it all away.
I am ready.
What was that commercial? Calgon, take me away.
Yeah.
What was Calgon? What was Calgon? Is it dish soap?
Yeah, dish soap.
Or dishwasher soap?
I think they actually have both. But
back
then, I think.
Remember when the lady that used to like soak her hands in it on the palm? Yeah. What was that? Palmolive?
Palmolive, I think. Yeah.
Oh my goodness! Yeah. Did you guys have in your home? Did you have a chef growing up?
No.
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 Yeah.
And my mother.
we were working class poor, but we had a chef. His name was Boyardee.
Yes, we did have that chef.
Oh my goodness.
Did have that chef.
Yeah. I could eat that every day, but now not so much.
Yeah, not so much now. I think back then I used to like the meatball one. Now I can't imagine eating that.
All right, I got to go see a man about a Keurig, but I will be right back.
Okay, all right. I'll get started here. All right. Good afternoon, everyone. Today is Thursday, the 11th day of January 2018. Can you believe it's 2018? Good Lord. Okay. If you have not taken a free trial with us, well, first, there was one other thing I wanted to tell you. I want to remind everyone that it is Thursday and we have a partners meeting tonight at 9 p.m. Eastern. 9 p.m. Eastern time. Okay. Now, if you have not taken a free trial with us, to take the free trial, just go to the home page at cfrn.net. And right up here at the top, it says sign up for the CFRN live training room. 100% free trial. User indicators learn our strategy. Click here. When you click there, you'll be brought to this page right here. All right. Where all we ask for is your email, your first name, how you found us. You hit that submit button, and you will be sent a confirmation link. Now, to get into the free trial, you have to click on the confirmation link. Okay. Now, if you do not get that banner up at the top. You can also do the same thing by clicking right here. Okay, just click right there and you will get that. Okay. All right, sorry, I was just thinking of something. I got totally sidetracked there. Spreadsheet. If you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Today, as I said, is the 11th of January. Got 5 ticks on the euro, 30 ticks on the Russell, and 3 ticks on crude. That's $211.25. Today it took 18 minutes and 2 trades to get to the goal for the day, and we took a total of 6 trade opportunities. Now, on the month, we're up $1,031. That's over 8 days, averaging 128 per day. So, because it's January, it's the same thing for the year. Okay? So, that's good. We're positive. We're over 1,000, and we're less than halfway through the month. We do have a long weekend this weekend. A reminder to everyone, we're not going to be here on Monday. Okay, we will not be here on Monday. Hang on a sec. Okay. I don't have my usual cup of tea. Well, I do have the cup, but it's empty. I guess. All right, so on gold this morning, there were no trade opportunities until an hour in, and then it was just a momentum short trade right here. And that was all we had on gold. During the break, we really didn't have anything during the break. So not a lot of opportunity here on gold. It was kind of odd this morning that all the markets were putting in new highs at the same time. All 5 of these markets were all going up and putting in new highs. And that is odd. They should not all be going in the same direction. That's why we have so many. All right. On the euro, our first opportunity here on the euro, we made 1 tick. And then the next one over here, we made 4 ticks to put us at +5. I missed this one. And then you can see I drew these lines because we were just in chop. We had lower highs and higher lows. And then it finally broke out of that to the downside during the break. There was momentum short right here. And that was it during the break. Okay. Now on the crude. Let's see. There was a long trade right here that I didn't get filled on. Man, I wish I had, but I didn't get filled on it. And then it changed directions and it started going short. It looks like, no, there was nothing there because it was going down into support. We had to break that support. And then we had a short opportunity right there, and I took 3 ticks profit on that. Then, and that was it. That was it for the day on the crude. And we had some pretty good movement in there in the first half hour. And actually in the second half hour too. But we just didn't get the trade setups today. Okay, on the Russell. Right here was the first one on the Russell, and we took 14 ticks out of that. The next one, we got 6 ticks to put us at +20. Then down here in the slingshot, things are all messed up down here. Okay, so we didn't have any trade opportunities through there. There was a shorting opportunity right here at 1018 that I missed. And it did not put in a lower swing. Then it changed directions, and it looks like there was a long opportunity right here that I missed. And right there that I missed. And we finally did get this one right here. Now, I say I missed it. It's possible the ES was in the weekly trading zone, and it probably was. That's why I didn't do anything. That's why it's not even circled. Because if I'd have missed it and circled it, then it would have been a valid trade that I just missed. But the fact that I didn't circle it suggests that the ES was in a weekly trading zone at the time. I know it was for a while there. Okay, in this last one here, we got 10 ticks. Now, during the break, what did we have? We had a bounce off the BBC right here. Okay. And that was it. Okay. Now, on the ES, all we had here on the ES was, let's see, Started out here, went up into the zone, came out of the zone. Looks like there was a shorting opportunity right here on the ES. Then it went back up into the zone. There was a long opportunity right here. Now let's see if that would have stopped out 59. Oh no, you know what? There wasn't a long opportunity there because the high of the day was right here. So there was no long opportunity there. Okay, so the only opportunity would have been this short right here on the ES today. All right. God, my voice is all cracking up. Okay, so as I said, if you're going to read the spreadsheet, you got to read the CFTC risk disclaimers down at the bottom. Today is the 11th day of January. We had 5 on the Euro, 30 on the Russell, 3 on Crude, 211.25. Number of minutes it took to reach our goal. It took 18 minutes and 2 trades to get to the goal for the day, and we took a total of 6 trade opportunities today. Okay, so our gross monthly profit, 1,031.25. That's over 8 days, averaging 128 per day. On the year, it's the same thing because it's the month of January. Oops, this monthly average I gotta fix though. It's divided by 1. Oops. Monthly average. Oh, yeah, never mind. I'll figure that out later. Alright. And if you have not taken our free trial, go to the home page here at CFRN.net. And right up here at the top where it says sign up for the CFRN live training room, 100% free trial, see our indicators, learn our strategy, click here. When you click there, you'll be brought to this page where we just ask for your email, your first name, and how you found us. You hit that submit button. You hit the submit button and you'll be sent a confirmation link. You must click on that confirmation link. Okay, if you don't click the confirmation link, we do not know that you took the free trial. Excuse me. I don't mean to keep clearing my throat. Alright. And that's it. With that, we can pass it back out to Studio A. Fabulous Phoenix, Arizona. Overlooking South Mountain, America's largest city park.
Okay.
It's the largest city park. And John is in here. I just noticed.
Okay, great.
Okay. Alright.
Let me get the screens, and then I will give him an open mic.
Okay. I can open up his mic if you want me to.
Yeah. Were you able to do grammar, spelling, the whole thing on that?
I did. It all looked good.
It's ready to mail? Okay.
Yeah, and
that comment that you sent me, why don't you insert that and then send it back to me in some kind of ready-to-send format?
The whole thing?
Yeah, just insert that line
Okay.
for me, because I can do that while I can send it while I'm on the radio.
Okay.
If
All
it's
right. I'll do that
formatted
right now.
and ready to roll.
Yep.
Okay,
I'll do it right
thanks. Okay, all right, let me get John's mic open.
There you are now. Open mic, John.
John, you've got an open mic. Welcome to the show. John? John's not there, man. Okay. Let me jingle him and let him know his mic's open. As I do. Okay. That should do the trick. Okay, S&P taken off. Here we go. All right. Now, we said yesterday when we were down at 48.49 that it would be a 30-point trek to get up to the highest weekly trading zone. We didn't even bother to put it on the chart yesterday. Well, today we're going to bother because we got to the zone. It served as, we consolidated. It turned out it was a great resistance. Boom. Down we go to the zone below. Yeah. And the zone below. Then back up, getting traction, leg, retrace, boom, and now we take out this high. And so this becomes a real reality even with only one trading day left. Hey John, welcome to the show.
Hi there. How are you doing?
Very good. Yourself? Did you need to catch that call?
No, I'll get it later.
Okay.
I'll get it later.
All right.
Well, we got a bit of a surge going on here.
Well, we sure do.
it's going to be another strong day, but the gold is also looking very good. The platinum is starting to gain on gold almost every day, which is basically what we suggested when we were back. Remember, we called this platinum when it was under 900. I think we got it around 880 something, and it's 988 now. I think it was about 888 when we called it. So we're up $1,000, and sorry, $100. Excuse me. We're up $100, and we're not up $100 on the gold, from the gold lows. So we are starting to narrow the gap a little bit. The spread is coming in, which is potentially very bullish. The palladium has come back quite a bit, and I thought we had a buy this morning, but it's starting to go down again, so I'd sell it for now. Cotton is absolutely on fire today, and I kind of missed this. The cotton kind of sneaked up on everybody, but I mean, we got the lows on the cotton. We've basically been long since the lows, post-hurricane lows. Mm-hmm. There was a hurricane pop, and then it went down, made a new low, and then gave a pretty good buy signal, which I think I called on the show. And here we are, we're 20 points higher right now. It's just fantastic. But the real story is we broke above that. What I forgot to mention a while back was we broke to new 50 new contract highs on the leaping higher, and we're making new contract highs every day, which is as good as it gets. It's very, very bullish, and I think that the cotton is probably suffering from some weather issues, but it's a strong economy plus some weather issues. And by the way, I think I made history this morning. I think I'm the first person on the entire planet to announce to the world that the gains under the Trump first year, which isn't even over yet, or whether it's since the election, whichever way you want to cut it, but according to what they're saying, the actual year of 17, right up until now, and a little bit into January, the gains under the Trump administration, first year, give or take a few weeks here and there, are you ready for this?
Yeah.
$10 trillion. $10 trillion. I am the first person in the world to announce that. And here's how we get there. I just happened to find an article that announced that the real estate gains we're at all-time record real estate prices, 31.8 trillion, and we have gained 2.2 trillion in real estate in a year. So if you add 2.2 trillion, 0.7 trillion of cryptos, and 7.1 trillion in stocks, which according to Trump is the number, there you go, 10 trillion. Now think about this. We might be only growing at 3% in the economy, but a 10 trillion net gain, albeit unrealized in a lot of ways, is a monumental increase in the actual economy. In the actual economy, it's more like a 30 trillion economy now, because listen, we've made 10 trillion in a year. Why wouldn't it be a 30 trillion economy?
Right, right. I follow your line of thinking.
And that's a world first on this show, because nobody's ever talked about a 30 trillion economy before. So it's probably bigger than that, because the underground economy, in spite of it all, is pretty big in the U.S. I'm sure the underground economy has gone up by several trillion as well. So the impact of this is being seen in front of our eyes right now with the rising stock market that is still continuing to rise. The impact of it on the economy over the next year or two is going to be beyond imagination. I think it's going to be monumental. And the world economy, people getting richer and richer. Remember the Chinese, they're making new millionaires every day. And they're probably making more millionaires per day than the U.S. is. So the fact that there's so many of them over there is got to be good for the world. And we hit 64.75 a short while ago on the crude. We're hitting new highs on the heating oil, and the natural gas popped up finally back over 3.
Yeah, this dramatic rise in crude was a little surprising for me.
Well, remember, not really, because
not fundamentally, but technically it was.
Well, remember yesterday we were looking at that base, right? And you're saying, and I remember, and this happened before, sometimes you get good news and the market doesn't react right away to it.
That's right.
And so we got this overnight reaction, and it's adding today, and the oil stocks are absolutely soaring. So our favorites are Devon Energy, APC, Gush, GUSH, ERX, and UGAS. They're all soaring today. And the solar stocks are doing well too, because the higher the oil, maybe the better the solar as well. The other thing that's amazing, and this has never happened before, there's never been a single time we ever went through a Dow big number, 25,000, 24,300, all the way down, where we didn't almost always go up a bit and then come back and go below the big number and jerk around for a day or two or even longer, right, before we finally got going. This is an absolute knife through butter. Take out of the 25,000. We have not even pulled back. We did pull back a little bit just to test it at 25,100, I think, and now we're almost at 25,500, which is absolutely amazing. We're 25,491, 25,495 right now. So transports are also going berserk. I mean, we're up 200 on the transports today. That is the equivalent of a 600-point rise in the Dow.
Really?
And
you've always looked at transports as a leading indicator, have you not?
Absolutely. Actually, well, let me correct that. It's 500-point move in the transports today on the pro rata basis. The composite, which I also said is on its way to 11,000 potentially, is just hitting 7,200 for the first time ever right now, I think. So that's a very big deal.
Yeah, that is.
And guess what? I think the traders out there, or the fund managers, are doing what I was doing months ago. They probably just started doing it. They're going back and they've probably got it pinned up on their wall, a chart of 86, 87, which we've been talking about on this show virtually all year, and all of last year. And they're probably trading off it, because guess what happened? We had this one day down yesterday, right? Mm-hmm. Just like 87, we had a big, the market overshot a bit. There was a bit of a pullback, and it looked like the top was in early January, right after the first 5 days. And then guess what? The market just kept going all the way into the end of January, and it's starting to look like we're going the same way, the way we're going right now.
Hmm. Mike in the audience just shared on Fox today, Fox News said that 49% of folks surveyed, I don't know where they surveyed them, said that Obama is responsible for the upswing in the economy, and just 40% gave Trump the credit.
Well, unfortunately, 60% of the population are ignorant at the moment, but it's not their fault. They haven't figured out what's going on in reality yet, but I guess they will soon.
Well, it
will eventually dawn on them.
The average American, and I'm not calling anybody average, I think everyone in this audience is above average, but the average American, if they turn on the TV, it's Fox, CBS, ABC, NBC, CNN, it's all the same. If it's on TV, it must be true. And unfortunately, some of the high-profile newscasters are way to the left of center line. And so people, they don't set out to be liberal. They don't set out to be misinformed. They simply turn on their TV. And so that's why, folks, you got to be careful what you let into your home. Okay?
Yeah, look, this is probably personifies it perfectly. You know, CNN, you know, in their ineptitude and ignorance, continue to go hop on about a 32% poll for Trump. That is just, it's not only an outright lie, it's a contrived number, and they gleefully report it, but it's total and utter garbage. It's the same nonsense that happened before the election when 17 out of the 20 polls were wrong and 3 of them were right. Now, you know, what's the definition of insanity? Doing the same thing every day
and expecting different results.
Exactly, that's what they're doing. I mean, you know, somebody should let them know, because one of these days they're going to get the memo. And here's the point: why would you pay any attention to any poll that didn't get the election right? They basically have blown themselves away. They're out. They're not even, you know, unless you're dumb. Why would you ever pay any attention to those polls? The only polls that matter, in my view, are the LA Times, the Investment Business Daily, and the Rasmussen poll.
Why LA Times? Just curious. What stands out of
them? Yeah, because they got it. Because it was one of the polls that helped me and you and me forecast the Trump win. And what really did it, from what put me over the top, and I reported on the show, was that the Rasmussen had us 2 or 3 points ahead in the final days, right? Right. But they also came out with something that to me was a game changer. They said that there were about 10% undecided, but leaning towards Trump, right? And they were probably going to vote for Trump. It was a really, really powerful piece that they put out right before the election. Literally a matter of a couple of days before the election, that actually was published. And that's what did it. I mean, and look, if we were, I think Trump won on a 47% win on the Rasmussen, right? So add 10% to that, and you got 57% support. So right now, his number today is 45, and I'm going to predict, I think he's going up to 50 fairly soon, possibly even before the end of the month or early into February. And he might even start going into the mid 50s before too long. I think he's had a huge base. He's building a huge base, and rather than be like Obama, where you went from being loved or adored in the first round to being hated by the end of his administration, I think it's going to be the opposite with Trump. You know, he's had a tough year, admittedly, but he's getting, you know, people are starting to, I mean, look at the market today, it's 25,500 points. I mean, and they say, you know, I mean, they're starting to say, you know, maybe this guy ain't so bad after all, you know, we can live with him. We can, and look at his tweets. I mean, he really hasn't nailed anybody for a while, you know. He's really stopped the name calling in the last couple of months. But look at the results. I mean, he beat up on the Paul Ryan. He beat up on Mitch McConnell. He beat up on the Attorney General. He beat up on Corker and a few others. And look at what's been accomplished since then. I mean, okay, it was uncomfortable and unpleasant for a lot of people, but you know, people are probably saying, you know, boy, where's the teeth? Trump doesn't, you know, he hasn't. Who's the next guy he's going to take out and criticize? Maybe he's not going to do that for a while, and that's probably going to help his numbers go up. But you know, all the things that are happening right now, including the Korea situation, is certainly going his way. Now, it's going to be interesting to see what happens with Pakistan, because they're basically saying that we're no longer allies. I don't really believe that, but they're sort of trying it on. You know, the thing about Pakistan is they're very big buddies with China, so that's not such a great thing. But at the end of the day,
the fact that we yanked $250 million in funding from them, you know, that's got to sting a little bit. But how dare they say such a thing? You know, when, I mean, yeah, we trimmed the give by $250 million, but we still gave how much to people who hate us, to people who want to wipe us off the face of the earth.
Yeah, and it's the same with the Palestinians and everybody else. But here's the good news: look, a lot of times people don't think of what the Pakistanis have to do as well, what they've had to live through. Remember, there was just a tremendous number of bombings and things that went on there in Pakistan almost daily, and the same in Afghanistan. I mean, remember, look at Iraq. When was the last time there was a bombing in Iraq? There used to be a daily occurrence. They're almost down to, weekly or monthly occurrences now, maybe monthly more like. And remember the prime minister was assassinated, or several assassination attempts on not only the Afghan leaders, but the Pakistan leaders. I mean, things were very, very brutal for a long time in these countries, and they are getting better. So, probably with the U.S. help. But we should have a lot of sympathy, because it's no walk in the park over there in these countries.
No.
It's so.
Can you imagine every time you go to the grocery store, you got to dodge incoming shell fire or whatever the case might be?
Yeah.
I mean, we get in the car and we go to the store and we don't think twice about it. Yeah, we know we could get carjacked or we could get held up, but I mean, they're literally dodging bullets to go get a carton of milk and a loaf of bread. That's no way for anybody to have to live.
Yeah. By the way, there's a revolution going on in car security, because this GPS thing, where you can stick a GPS in, and they've got a new thing.
Talking about the low jack? You're talking about that?
Yeah. Well, no, way beyond that. My son, as you know, lives in Mexico. He lives in Monterrey, and he was. There was some problems there with carjackings and stuff like that. Mm-hmm. And in fact, the U.S. State Department came out today, and they've got no travel warnings for 5 states in Mexico. So that's quite a big deal, including Carrera, including Acapulco. Can you believe it?
I thought the violence had sort of calmed down in Mexico.
Unfortunately, it had, but the last year was the worst ever. The worst ever. I think there were 20,000 murders or something. So it's a terrible number. Anyway, but the thing is, with the cars now, he got this thing installed for very little money. Actually, it was a fantastic deal. The GPS, if a car gets hijacked, you can actually shut it down remotely, right?
Okay.
And but more importantly, even better than that, you don't even have to have an anti-theft device now, because you can actually shut it down outside your house or in your garage, so that if anybody tries to get it, they can't. It's immobilized, and it's virtually uncrackable. So a whole new generation of anti-theft devices could be coming out for cars. Could really drastically reduce car theft and even hijacking, at that matter. Carjacking, because if they do succeed in carjacking, you can actually shut the car down but tell the police first to get up to the within side of the car and make the arrest. So this is a game changer. It's a very big deal.
Huh. That is big.
Yeah, and I think it applies to, there's an awful lot of trouble with trucks being lost and hijacked and things. That's a huge problem. So this is going to change all of that. And in the coming years, it won't happen overnight, but it's something that will gradually become probably mainstream, and may even be incorporated in the manufacture of cars in the future.
Interesting. Let me see if Ed's here yet.
Yeah, just let me give you a quick rundown on the markets. We're making new highs. Oh, by the way, AGIO, which is one of our favorites, took off today. It's going bonkers. And by the way, the comp is making all-time highs today. The Nasdaq. Just a sec. and yeah, look at AGIO. It's up $6 today. Intercept Pharmaceuticals is up, and I would be considering buying that even now, because if it's not up very much just yet, but it's put in a nice bottom, and it looks like the lows might be in on Intercept. Also CMG, which is the fast food point, the Chipotle Mexican.
Right.
I think the stock has bottomed. It's actually made a kind of a nice head and shoulders, and it's about to break the neckline, and it actually could be in for some serious upside. I think we mentioned GE on the show a while back when it was right on the lows. It's gone up nearly $2 from where we suggested that the lows were in. IBM is also, these are the dogs of the Dow, as we mentioned before the new year. And it's remarkable how much they've gone up, actually, since before the new year, and especially IBM. Might be on a bit of a sell right now, actually, IBM today. This might be a possible turnaround point for IBM. But Intel also, we put out a buy on Intel, I think, this morning, and Intel's acting, it's up $1. LABU has been screaming higher off a very deep low that it put in about a week or two ago. It's almost back to the highs of the year, and I think this time LABU is heading for over 100, possibly to 120. The XIV, which we said would, above 120 would go berserk, is just hit 145.5 today, all-time high. However, we might be on a possible sell here on this thing right here. Might be ready for a bit of a pullback, because in spite of everything, the indices going up, there's some stocks that are not all joining in today. So it might be a sign that there's something just right around the corner that, getting up to 25,500 on the Dow is a potential, roadblock for it. So we'll see whether it can get through it or whether it backs off a bit. Cotton, lumber is actually at an all-time high right now. Just hit an all-time high this morning. Palladium is actually pulling back, so it's actually going higher again. And the metals, look, I think the metals are very, very close to taking off here in a very big way. The silver put in a dip down to 1690 this morning, and is at 17. But I think if it gets into the low 17s, it's really going to move rapidly higher. Somebody came out with an article this morning, which is exactly what we've been saying for several months now, which is the silver sentiment in silver was, as close to zero as it gets just a couple of months ago, with the all-time record short position in silver. That is now reversed, and every time in the past that this has happened, there's been a massive move up in silver. So that certainly looks to me like it's on the cards, as going, possibly even before the end of the week. We could see a big move on the silver. I don't know what's happened with that grain report yet. The wheat is up. The beans are down.
Well, it comes out at 12 noon, so, but that's tomorrow, the 12th.
Oh, right. So the sell-off, look, the wheat is positioning itself for a possible upside. The oats are actually going higher, which in my view is leading the market potentially higher. The bean oil is actually giving a kind of a buy signal here.
Soybeans are way off. They've been trending down all week.
Well, look, this could be if we break up above 955, 960. I think you got to go with the beans, because if that happens, you might be in for a very, very big upside move. And if that happens, it could be the catalyst that moves the metals higher going into the end of the week. So that's kind of the way I see it.
Mike asked if you would take a look at this gold chart. I may have that looks like that chart got deleted. Oh, that's a real shame. Wow. I'm not quite sure how that happened. Maybe it did, maybe it didn't. I'll come back and look at it again in a minute. Ed, you got an open mic. Welcome to the show. We cannot hear you yet.
The Bitcoin got slammed last night, but it bounced.
Yeah, let's take a look at that chart. Ed, is that you? I hear you. Sounds like you're on the other side of the room or something. Okay, this is a daily chart on Bitcoin, guys, and we are we're right around that 14,000 level. Let me scrunch it up a little bit.
The chart doesn't look very good, although if we get above 15 again, it could turn into positive.
Yeah, it could. How about now, Ed? Are you there? You're extremely muted. It's like, Ed, you appear to be muted on your end or something. Plug it in a different USB port. Okay. All right, John, while he's fiddling with that, any other thing political or market-wise that you want to cover?
Well, the natural gas shot up this morning finally. It actually moved pretty fast. Well, you know, boy, 65. We had this as a target quite some time ago. And I think I remember back then that, you know, if we take 65, obviously we're going to probably take a shot at 70. And if we get past 75, then we're going to start going back towards $100 a barrel. If we get over 90, we're probably going to go back to the all-time highs. So those are the parameters ahead of us. So, you know,
go ahead.
Well, you know, this oil has sneaked up on us, really, you know, quite quickly and fairly quietly, you know, without too much pizzazz. But you know, the fundamentals are there. We've never had eight drawdowns in a row, and they're not just small drawdowns; they're big drawdowns. So the oil markets are getting very tight in the U.S. And presumably so is the gasoline. So just like that lady was going on about the economy the other day, this is a sign of a strong economy because, you know, prices at the gas station are going up because more people are driving, and they're driving more economical cars. You know, most of the clunkers, most of the real gas guzzlers, except for the big trucks, are behind us, you know. And cars are twice as economical as they were a decade or two ago, mostly. Which has helped an awful lot, and it's also helped to clean up the atmosphere. You know, I was watching an old James Bond movie the other day. I think it was Goldfinger, and I just get my gold juices going. But I just came across it by accident, and it showed a shot of London. And if you get to look at Goldfinger, you got to look at it. I mean, you almost. You know, it's almost a jaw dropper because it showed the Houses of Parliament and Big Ben, and they are, I'm not kidding you, they are black. They're black.
From the pollution? You
know, this is before, this is when they cleaned up, you know, this is before they cleaned up all the buildings in London. And, you know, remember, the Tower Bridge used to be black. And, you know, when they cleaned it up, it was like, wow, you know, that's a pretty incredible bridge now. And it didn't really look that great before. But the same with the Houses of Parliament. And, you know, as I said to you, I mean, this is a true story. When we used to go out as kids, we used to live in Bayswater. And I can remember the address of 54 Caroline House. And I'm telling you, we come home and be soot around your nostrils because of the Battersea Power Station and all the other stuff that was going on back in those days. So, you know, when I say, you know, I'm telling you, 10 years ago, 20 years ago, there used to be this haze on the horizon, this yellow haze. That has largely disappeared. Look, it may not be the case in Los Angeles or maybe in other cities, or maybe Beijing, but in a lot of places it's much better than it ever was. The cutting down, just the catalytic converters and the cleaner, the 10, 20 years ago there was a stinker every few cars. That's very 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 seldom you see that these days. Most of the cars are well maintained and are clean burning, and it's pretty rare to see a car smoking these days. I think you'll agree.
Oh well, here in Arizona, no, they take them off the road. You don't ever see that like you used to. I just came across what you were talking about earlier in regards to Mexico. Yesterday, the State Department issued its highest risk advisory against travel to 5 violence-ridden Mexican states. The Category 4 warning to Americans against visiting the northeastern border state of Tamaulipas and the Pacific Coast states of Colima, Guerrero, Michoacan, and Sinaloa lumps Mexico in with such war-torn countries as Somalia, Afghanistan, and Syria. The advisory came after Mexico's surging violence, fueled by a power struggle among drug cartels, left 22,409 people dead in the first 11 months of 2017. That's incredible. It's the most since the government started releasing crime data in 1997. Mexico as a whole received a Category 2 rating, as did the tourist area of Los Cabos and Cancun. And to think, we used to drive down there every weekend to Puerto Penasco, to the Mission. It's a 4-hour drive, door to door. And we would, we never once gave thought to that violence. It was right after we stopped going on a regular basis, like every other weekend, that someone was shot on the road from the border to Puerto Penasco. It's a lonely, solitary, hourly drive, and about at the halfway point, there's this little, what do you call it? This little building where you can get out and pray. It's a Catholic thing, but I don't know what you call those. Is it a prayer grotto? Is that the proper term?
Oh yeah, they have quite a lot of those around the place. Yeah.
So we used to stop there and stretch our legs, walk around, and.
Listen, the golds, the metals are taking off here. We're starting to edge up towards yesterday's high. Platinum's now up 11.8. I think it's going to surge into 1,000 here, beyond 1,000, possibly even today. The palladium just jumped back into positive. It's 1080 now. Lumber just hit a new high of 465 a minute ago, and cotton is 82.60, which is the highest it's been in a long time. So, and by the way, the coffee, I'd keep an eye on the coffee here. The coffee finally kind of got depressed again and is hitting the low 120s. Might be headed back to that 115 level for a possible double bottom, or even lower, if it can't hold the 120s here. The fact that we've been unable to hold the gains a week ago up around the 130 is not very good news for the coffee. And actually, the fact that the sugar couldn't hold the 15 is also a bit of a problem. So, listen, I bet it doesn't look like Ed's going to come on. So,
yeah, go ahead. He was trying to switch out headsets. He got a new one, and the new one's not working as well as the old one. So, I'll catch you tomorrow.
Can you hear me, Dwayne?
Yeah, Ed, I hear you.
Oh, here he is. Okay, I'll be back to you in a minute. I'll just put it on mute.
Okay. How are you, buddy?
Okay.
Yeah, I hear you pretty good now. Before, it just sounded like you were incredibly far away.
Is it still bad?
No, it's good now. It's good.
Okay.
Audience, can you hear it okay?
Allison, I went and got a new microphone from, but I'm back.
What did they soak you for?
This is my old microphone. We've always had trouble with. I'm going to have to do something with my software.
What'd you pay for the new one?
Oh, I just got a cheap one.
Good.
I bought a good one before, and I couldn't make it work at all.
Oh, God. The most expensive one I ever bought was
$15 at Walmart.
The worst one I ever had was the most expensive.
They seem to work better.
Now, I'm talking about the headset microphone combo. Now I use it. I have a different setup. I got a boom mic with a Heil PR40 mic and a headset.
Right.
It's as if I did this for a living or something. I got all the choice. So I got the split screen.
Yeah, like it's really important to you or something.
It looks cool, I gotta admit.
Well, sounds like a lot's going on.
Oh man, there's stuff happening all over.
It does. You need to put a picture up on it.
Oh, I've got. I just emailed somebody pictures the other day. I'll work on that while you're telling the folks what you think's happening out there in the big wide world. Because they hear me ramble every day, and they hear John speak intelligently every day. So why don't you share with them what you think's going on? You can talk politics, you can talk crude oil. For those who don't know, Ed Curry, in a previous life, was a commercial crude oil trader. So while we might be trading contracts of crude oil, he was actually trading ship loads. That's ship as in boat, ship loads of crude. But he comes and joins us every other Thursday, and he is our resident Elliotician. He'll give you wave counts on any market you want, like the S&P, gold, crude. But just take it away and run with it for a bit, Ed. Ed?
Okay. You gonna pass me the charts? Or, we're gonna do
I'm gonna pass you the charts. Oh, yeah, sure.
Yeah, I'll tell you what. In general,
we've only been doing this for how long? Let me send you the charts. Okay, stand by.
Okay, I'm back.
Okay. All right, I just made Ed. Okay, Ed. All you got to do is accept the charts.
After listening, I have to say, we're going to go into a really big inflationary market here. And I think anytime we can see crude, you can't see my screen.
Not yet.
It's here.
Now, is this crude
anytime
business...
we see crude doing what it's doing...
Is this on the back of Iran, or is there something else in play?
Are you there?
I'm here. Can you hear me?
Well, there's a lot of disruptions and Can you hear me now?
I hear you. I hear you crystal clear.
Dwayne, can you hear me?
You can't hear me. Just
John,
a second,
I hear
Dwayne.
you just fine.
Let me see what this thing's doing.
Okay, good.
So I can hear Ed. I can hear John. John can hear me. Ed can't hear me.
Okay, but crude oil seems, and you can't hear me.
Yes, we can hear you. Ed,
we
can hear you.
Here, let's see. You can hear me now?
Yes.
Okay. Well, I won't touch anything.
Okay.
Anyway, the crude oil market is stabilized at much higher levels here than anybody expected. And crude is pretty much major expense in any mining and basic materials. These kind of operations are for commodities are all affected by their energy costs. So when crude makes a significant move, it causes more expenses for the mining companies. And gold miners and silver miners, they really are affected in a big way on their bottom line because their profit margin gets affected. So their break-even costs go up with crude. It has that kind of effect. It has that effect on the agricultural commodities too, because they have to be harvested, and there's a lot of energy-intensive stuff that's done there. So when crude starts to trend higher, it tends to put a floor under the other commodities because they have to start raising prices to break even. So the inflationary wave, so to speak, really usually starts with crude, and it's now become apparent that we've got a lot going on here to look at. You can see in price, the price never lies. Okay, the price is telling us something right here. we've drawn down the surpluses that we've had worldwide. Okay, we don't have those gluts anymore. The market could turn us back to what was going on in the Middle East when we had an oversupply of inventory. Well, we've pretty much wiped that out, which makes the market more sensitive to the Middle East now, particularly the prices of crude oil and products. And here's a chart of the days of supply of crude oil for us here. And this is the number of days in inventory, so it's really an accurate measure of a combined supply and demand. This takes demand into account. This is how many days we have, and currently, currently we are at 24.2 days supply of inventory. So we're back down in here, but the slope and the trend, you can see the drawdowns are significant. We're losing a lot of inventory month after month. And that's just going to tighten the markets. But what it does, it makes the Middle East and any conflicts there and any outages in Venezuela, Libya, potential Iran, these things become much more important at this point, because it doesn't take much to bring this thing down to here. And we start to get in here, and we're going to start to head back to the $80 to $90 level. So will we get it? Well, if you look at the trend in it, it doesn't look like it would take that long to get there. So a supply outage of a major producer would do it. And then we'd be, sailing higher. And here we are. I mean, the guys started hedging their production over $50. And they hedged more at 55 and more at 60. And now they're starting to be a little afraid they've sold out production too far. I'm talking about the frackers. They're getting heat from the top guys. They're saying, why did you lunatics hedge this down there? They're taking losses on their futures positions that are being covered by their gains when they sell crude in the physical market. So the dynamics of this is when the executive starts to stir and say, look, we could have made all this more money if we didn't hedge, they start making them cover their hedges, and that's fuel to take crude oil even higher. So, I mean, if I had a gun to my head here, I'd say crude oil should be comfortable this year in a $50 to $70 range. But the fact is, the risks are to the upside because of the potential supply disruptions and because of the trend in the days of supply of inventory cratering like this. So, the surprises can be to the upside. And I think the commodity markets are starting to lay that in. And John was talking about all the other commodities and how they're showing signs of really taking off. And, I wouldn't disagree with that. I think the key, though, that in my experience is you can usually you get the big waves of inflation when crude makes a big move, because it inflates everything. It's in the cost of manufacturing of the commodities, and it's a big cost, and they can't get around it. It is what it is. So I'm actually comfortable with crude. And you could say, well, how far can this go? When will these guys come in and drill like crazy? Well, they got burned, and so they're not going to be so quick to come back. They like the higher prices right now. They know they have the oil in the ground, and if they think they can sell for higher prices next year, they're not going to start pulling it out of the ground. It depends on the individual companies, but those are the dynamics. and they might set up some wells, but they'll take their time, because if they really believe we're going up to $80 or $90, why would they want to get it out now and rather get it out, a year from now when they can sell it $30 a barrel more? And so that's the dynamics that are going on, and it's a big enough market that we just have to kind of watch and see what they do. But if you take a look at the technicals on crude, there's nothing not to like. There's nothing not to like in crude oil. So, and we've been friendly to it since $45. That's seems to have been it. And somehow I'm going to have to do this. I've got to get to a handle here.
That last breakdown after the previous rally that failed, right, the false rally, that kind of put the people in the frame of mind you're talking about right now, which is they're not in such a big hurry to drill this time, going forward. Yeah.
Right. They really aren't.
Yeah. Yeah. Because they don't want to get burned again. And I think.
A lot of guys got fired already for doing that. This is the way it works. So.
The closer we get to 2020, and look, remember, you and I a year ago were talking about the growth in the economy, and right now the way we were projecting a certain amount of growth to 2020, to a point where we could be using more than 100 million barrels a day, possibly 102 to 105 even by 2020. There's no way in the world that can be met right now.
Right. You're right. So, that is why the reality. And look, it's the same as the gold. After the crash of 2011 through 14, the new exploration budgets were cut, and so what's the result of that? The lower production today, and supposedly lower production for the next 7 years, possibly only 50% of previous output by 2023, 2024. That's why I think those 2 years are going to be a very big deal in the gold price. And in the same way they took $500 billion out of a new investment in the oil industry, that's going to hit home in a couple of years. So 1920, we get into those 2 years potentially with a very, very tight market where what happens if some of these big wells in Saudi Arabia suddenly run out? Could happen, Right.
So and look at the North Sea. The North Sea is already in decline. 120 platforms shut down.
It definitely is.
Yeah.
It is. So you got the dynamics there that are still supportive, even at these numbers that look high to everybody. But I'll tell you what, if crude's going to stay up here, gasoline prices are very cheap right now. So, so we could see, with demand the way it looks like it's taking place and the way the world seems to be coming out of this thing, just the optimism and the movement in the economies, and it's not just our economy, could really drive gasoline prices much higher. So the margin between crude oil and gasoline, we could see some real gasoline spikes in the summer. So just keep that in mind. It's still premature for that to happen, but there's a lot of guys that just make a living trading the difference between gasoline and crude oil, called the crack spread, and there's a lot of money to be made there. It's a little tricky, but boy, when gasoline gets tight, it goes to obnoxious margins, like $40 a barrel. I was seeing it go to $40 and $45 a barrel. When you don't have it and you got to go to work, you still got to buy it, even when it gets in short supply. So it's not there yet. But if crude stays at these levels and we're getting into the summer, gasoline's cheap. And it'll start looking at it in March, April, and May. Those will be the stronger months for gasoline.
Well, we're in a traditional, very strong period for the products going into May, the May Memorial Day, And in addition, the natural gas deficits that you and I were talking about months ago are really starting to bite now, because we're already, we failed to replenish last year's deficit in the summer, and now we're adding minus a quarter of a billion cubic feet every week. That's actually a formula for an explosive up mood in natural gas at some point. Not, and it may have already started off this last bottom.
Well, there's some really high prices in certain locations in the country right now that are like double and triple Henry Hub futures prices. Today they're paying that. So some of them, are at $10, and we got the futures price sitting there, but the supply's here, it's not up there. That's the thing with natural gas. You can get supply dislocations that cause real aggravation to the buyers in the market when it gets cold like this. So it's there's just a lot of things under a lot of the commodities right now, and you think, well, this has been going up for a while, and we've got a lot to deal with here, and when's it going to correct? It's really the question you should be asking is, why isn't it showing me any signs of topping on the longer term charts? And say to yourself, it's okay that I try and go against this really powerful trend. I mean, guys have been totally missed the move I know several guys that have totally missed the move in the stock market. It's been going up for years. I mean, just because they're trying to look for a top or it can't go more, but it can go more. It's all about money flow. If you've got money coming into the market, it's going up. It doesn't matter if the RSI is 99.99999. Just the overbought and oversold stuff can be useful in a trading range type market. But when you're in a powerful trend, one way or the other, you have to be really careful. I'm not saying you can't scalp to make money against the trend, if that's the way you want to do it. It's just a lot easier to ride with the current in the market, and you can make more money for your buck doing that. And what I've found, and it took a lot of years to figure this out, is that I lose money when I try and fight the trend overall. But if I think I've got a great system and I've got a reason why I should call a turn in the market and stuff, fine, I'm okay with that, as long as it's not a powerful trending market. And if it's got a certain slope on the charts and you see it make some eye-opening moves either up or down, you better be careful, because it's a lot easier to go with that than against it.
Sure.
And that takes a long time to learn, right?
Yeah. Well, it's the basis of my look. You just have to, you have to get your brain out of the way sometimes in the markets, and you have to, like today. Look, here's an example. This morning, the mid cap, the strongest market this morning, believe it or not, is the mid cap, practically, and maybe the Dow. The mid cap's up 20 points. The Dow's up 132. So the mid cap doesn't normally go up 20 points in a day. Like a few days ago, it went up 5 points when the Dow went up 200. So there's a phenomenon going on today. The mid cap is absolutely on fire because it's a huge beneficiary of the tax deal. The S&P's up 13, which is sort of in line with the 100-point Dow move. So 130-point Dow move. So, but the one that's lagging today is the Nasdaq, and it actually was bordering on negative or just unchanged at the beginning, on even overnight, but it did get going. And so, when it broke the 66 sort of 80 area, 80, 90 area, that was a signal that we were going higher, and was, pretty much a foregone conclusion. Now it's run up to 67.12. It might be, we're starting to come off a little bit here, so we might be in for a little bit of a pullback today because it is getting a little bit overdone. The other thing that I've noticed recently is the bull market is so strong, and Dwayne was asking me about this yesterday, which is the advanced decline line. In a way, you can maintain we had quite a strong pullback initially yesterday morning, which started the previous afternoon, It didn't even last a day. Because what happened was we had the advanced decline went minus 1200, and it literally turned on a dime. And here we are, we're plus 1500 today. So that was the correction. That was the correction. Literally, less than a day.
Corrections are cut short in this market, ridiculously, though, right?
Yeah.
Compared to what we traditionally would see.
And Dwayne's value areas that these are pretty when they start breaking out above these ranges that he puts out, they really work, and so these are and you just look, you have to take a shot at it.
His zones are really pivotal.
Exactly, but when they break, when they break, you tend to have big moves. So the risk reward is trying to get positioned around those breaks for the move, whichever way you think it's going to go, and that's the secret.
Totally agree.
Yeah. So this is it's all about. Listen, what I try to do, and people have heard it for long enough now, is it's like a train pulling out of the station. You have to jump on the train as quickly and as early as possible, because the closer you are to the turning point, the less risk you have to deal with. And if the train shunts around a bit, you can live with it. But the main thing is to try and get on that train as it's moving, as it's starting to move, and stay with it, for as long as you can. Along the way.
It gives you an easier chance to hang on if you get in pretty close to the turn.
Yeah, because the problem is the higher the thing about the market is everybody wants confirmation. So I learned this from Peter Steidelmeyer, one of the greats, and this guy turned nothing into turned $35 into 200 million, and he says the problem with everybody is they want confirmation, so they're afraid to buy in 2009 because they can't see the economy getting better.
Right.
Even though the market's turned. And today, the economy still hasn't delivered, and the market's still going higher. But, at one, so you have to get away from this mindset about, to confirm a trend change, you've got to try and identify trend changes and get on them early. That's what this business is all about. That's the secret of this market. And
you need to have a strategy that you have confidence in, so that you can act on it in a time when it's hard to act.
Absolutely.
So you have to have confidence in what you're using.
Yeah, I mean, look, it's always hard to act because, you have. Listen, if it was so easy, everybody'd be doing it. But most of the time, I mean, yesterday morning. Around about 10:30 to 11, the market was cratering, right? And it honestly looked like it was going to crash for a minute. And then various reasons, including the advanced decline turn, I said buy on this next spike. Now that was a little bit of a stretch, but it worked out. Cover in reverse on the next spike. Just a sec, sorry.
I'm here, Ed.
Hey, Dwayne.
How are you?
Well, I'm going to jump on crude here. Here's the current intraday count, the one that counts to me. It's the 320-minute chart. It's kind of a very powerful move. It's gone, this thing started in the $56 range, and here we are almost at 65. It's been a steady run up. The corrections, as you can see, have been very minimal. We had one here. We make a spike and we go sideways for a while, and we come right here. We are making new highs. We go sideways. Look at these shallow corrections. I mean, this is a very, very bullish chart, and it remains in wave 3. I mean, I would get excited when it pulls back on the MACD to the 0 line, which would be a wave 4 minimum retracement on what this is, the dominant wave count for me. But would I buy it then? Absolutely, because many times it looks like it's going to pull back to this 0 line and go up and make another leg up, but that would be the 5th wave. The problem with this kind of power trending market is, it's first of all, it's not letting it get to the 0 line, and even if it did, it'd be more than likely to re-enter the third wave because the slope of this move is steep enough to overcome what would normally be a top. So it can do that until it quits doing that. And so in my mind, I like buying the dips on it. I still think it's safe. People say, well, this is the highest we've been in 3 years. How can you just go in there and buy it? Well, you know, you could have said that back here too. That's how you can do it. It's run $6 already in not much time. So we need to just recognize what the market's showing us. And if you can see, and if you have a strategy, if you know how to read your charts and you know have confidence in what you've learned by trading in the markets, then you can come up with what works for you. That's really the key in trading, because it's all about whether, you know, you have the confidence to move in your system. And when I break down this current leg up on a shorter term chart in crude, this too will be a buy when it pulls back some more. And when I hit this zero line on the 55-minute chart, I've got that set up in my alarm so that it's going to alert me when that happens. I'm going to come in and look at the chart and find myself a shorter term entry point and try and buy it. Okay, maybe it'll be in a crash. Maybe I'll give it another bar. You know, it just depends on what it looks like. But when it hits the zero line, it's pretty much a minimum retracement requirement to mark it as a wave 4. But I'm going to buy that, even though it's just turning up for wave 5 in the final leg of the move, because in power trending markets, it blows away the wave 3 high in wave 5 and keeps going. And before I know it, it goes right back into wave 3. And we are in wave 3 on the longer time frame. So do I think I want to do that? Yes. What would be a normal retracement? This is Brent. I shouldn't be showing you Brent. That would confuse you a little bit. Well, this is the Brent. I use them both. This would be a normal wave for retracement in Brent, $67 to $68, and today's high is $70.05. So we hit $70 in Brent. So let me just say this. I would think under normal conditions, we'd see something like a $50 to $70 range in crude for this year, based on my stuff. You know, based on an algorithm I use to push forward prices. But also, when I do the statistics on that, it's much more likely to take out the $70 level than the 50, because I have to account for the trend. I have to account for, hey, we're almost, you know, to $70 here. The way crude's trading right now, it's 64.77 on the highs. That's just $5. We're talking about the year. We're talking about if we get supply disruptions in the Middle East with this low inventory level, we can spike easy to $80 to $90, and crude does usually outperform what it should do. I mean, it's such a big market. There's a lot of people that have to go buy their supplies when they see it spiking. The hedgers and the airlines and the people that need to buy fuel going out years, they start to go out and buy certain amounts at those times. So there's a lot that can push the market higher. On the S&P, it's just like an unbelievable dynamo here. On the monthly chart, it's in wave 5 up, which we've been in since 2016. This was the low that was made in 09. So when we break that move down on a monthly chart, we would call this a 5th wave up. So coming back here in the wave 4, and there are allowances that did not quite get to the zero line here, but it still marked it because it was within 10% of the peak, which is one of the rules in the algorithm I'm using. So it did mark it, even though it didn't quite make it there. That's how strong the market is. So this being the leg up that we're interested in right now, if we take a look at the weekly chart, it too looks like it's in the 5th wave up. So if I look at this last leg up from the 4th wave on, let me go to the weekly chart. If I take it from here, which I'm going to subdivide this using a 1400-minute chart, so I can get that whole thing across my screen. That's the only way the mechanical wave count works. You have to have, at least I use 110 bars across the screen to give me the right measurements for the 0 line. So you can see it came back down here, bottom for wave. It's real easy to go back and look like this when you're in the middle of it and pretend you don't see anything to the right of the line. It doesn't look so obvious to you, okay? Things always look better in hindsight. But nonetheless, this is still isolated into a 5th wave. So I am interested in here, but I'm not ready to pick the top. So I isolate that last leg down. Lo and behold, it's still in the 5th wave. This does not look like crude oil right now. It doesn't look like it. So because crude oil is still in its 3rd wave on its dominant. So I'm interested in this, but I've seen this so much in the stock market where this ends up going back into a 3rd wave, and the only way it can do that is if it exceeds the length of the 3rd wave. So here's the beginning of the 3rd wave on this chart, and it started from, let's say, 2700, and it went up to 2760. Okay, so I need to go over 60 points off this wave 4 low. So if this thing can get to 2807, it will start to change the count back into a 3rd wave. Okay, so that point I know that the thing's going to ignore this count and go back into a 3rd wave. Okay, but that does, we'll just have to see how it plays out. So those from between here and 2807 will be interesting for me. Am I interested in shorting it? No. I'm interested in taking profits on just a small part of my position. Okay, that's the way I'm looking at it, because the trend is still there. Maybe we're going to get the top in here. I'm not betting on it till I see more. So, but I do know where my decision points are. So knowing those decision points could help me up there, especially if I got some kind of other confirmation of a sell setup up there. I might be willing to be more aggressive on what I take off that I'm in. So, and now just to take it to the last leg here on this, we'll look at the last leg up, and here's where we are today. On the 17-minute chart, we have not topped. We're in wave 3. We have a pretty strong indication, you know, it's projected in 3rd waves, even right to here is the first projection. And this would be the next target if it gets above it. And that is way up there, guys. That's 2783. If it can get through 26, let's say 2769. Okay. So that's taking it down really on the shorter term charts. And that's okay. It still isn't, it doesn't look anywhere near top. If this thing comes on this chart, if it comes back to the 0 line here on the 17-minute chart, I'd probably buy it. Yep, I would look real hard about buying it. And this is plenty of support in here for it if it does pull back in here, so in this area. And if it does, that thing comes back to the 0 line, I'm going to buy it because it should go on up and make new highs. New record highs. I guess we're getting spoiled with new record highs, aren't we? I mean, we really are.
It's every day. Okay, we got a new high on everything. All right, see you tomorrow.
Oh, man. Anyway, Dwayne, I'm going to jump on gold, and then I'll cut out myself here. On gold, here's a quarterly chart on gold. I know John's real bullish on this thing. I am too.
Are you there?
And
Ed, can you hear me?
Yeah.
Actually, I think the gold is very close to taking off here. Once it can get up above this resistance, just slightly above the market. And also I'm looking at the grains here. If they reverse tomorrow, that could be very positive. In the meantime, we got cotton limit up. That's never. I can't even remember the last time cotton went limit up. But it's locked limit up 3 points. That's
it is.
Huh? Yeah, and lumber.
$500 a point, isn't it?
Yeah. And lumber.
That's $1,500.
$1,500. Yeah. Lumber is also making new highs as well. So cotton and lumber together sometimes go hand in hand.
Have you ever traded lumber? Have you tried trading it? I had a hard time trading it.
It's very tough because it's one of these, buy and hold kind of deals.
Yeah, it's a thin market. I don't know if it's gotten any better, but I couldn't trade it before.
I don't think so.
I know this, but the gold market, I agree with you totally. I'm holding call options. I'm real aggressive in my call option trading. I buy them and sell them and buy them and sell them, but right now, this to me is really looking good. It's looking real good, and I think, here's the record high, 1920. We made our wave 4 pullback here. We made a 5-wave move up here to the top for what I count is wave 1 up of wave 5 up. That's wave 1 up. The top of it is 1377.50. So I'm saying, I'm using 1385. I always put a cushion in it. But when so that's wave 1 up. I'm anticipating this is here. It's got it marked as a 4. I just don't buy it. This I believe was a completed 5-wave move up. This is an ABC down, and we are trying to enter a 3rd wave up of this bigger wave that's going to take us to new record highs. When we break above the 1377.5 level, whatever my position is, I'm more than likely going to double it at that point. I'm changing my position a lot, but I'm basically staying long. It's a matter of how long I am. So, but I want to be in that because that could well be the 3rd wave of the 5th wave up. And the initial target on the 5th wave up on this count, on the monthly count, is here at $2,095. Then we got $27,000. I'm sorry, $2,740. $2,740, $2,095. So we're going to be, those are the two. But each time Elliott goes through a target, it generates a higher target than it always generates 2 on this system I'm using. But it'll regenerate each time you go through it because it's looking at another, it's a Fibonacci number of the extension of the 3rd wave. Now, what happens is this could be a big enough move that this ends up being a wave 1, this ends up being a wave 2, this ends up being a wave 3 that, could go up several $1,000s. It doesn't have to be. I don't really care. I do care, but what I do know is this is a decision point, and it's a big one. And I'm not the only one looking at it, okay? There's a lot of people that are going to be watching this level because it's a potential 3rd wave, and 3rd waves are the largest wave in a trending move in Elliott. And they're very chaotic. They're very, very one-sided, whether up or down. And they're very emotional. Very emotional. So it's when people that are short recognize they're going to get their hide burned and they can't wait to get out. And so they just start covering shorts. And it's like holding a guy's head underwater. How long can he stand it? And I've watched people hold their positions. I mean, I've been in many trading, what should I say? I've advised a lot of companies that trade and have traders. And I've seen, that people all have different hard-headedness about them, about how much heat they'll take. and some have more cash than others, so they're not willing to admit they're wrong. But you get into a structural short covering move that can extend these third waves to obnoxious levels because of people that are on the wrong side of the market. And you would say, who in the world would be left in that market? Well, there's a lot of people with deep pockets. There's a lot of people with hard heads. And that's what makes the market interesting, because as the dynamics are such, you get everybody's personalities involved in this thing. And we've all got different goals. All I know is that's a decision point, and I know it is. And I'm looking at the numbers coming back to it here from here. I'm looking at the fib numbers, and the number that I have that I'm looking at on an 80% point is around 1344. So it's a 7862. I use an 80%. Just that's a fib number is 7862 actually, but I always use the 80. That's what the guys, I grew up in the floor trading guys, and that's what we always used. So that's what I still use. It gives you a little cushion, but that's pretty much the point of no return. But this is the confirming move here over here. So I'll probably increase my position over 1344. Okay, I'll probably do that. I know I'll be pretty dramatic on this move, and I will probably be trading more futures than options at that point. So
I'm totally with you on this. In fact, your numbers are fitting exactly with mine. I already came out with a 2700 target for gold, and initially 17. I'm looking for 17, and then 20, the low 20s, and then 27. 27 to 3,000 is the range, because if we start getting up to 27, it's going to get very frothy. And I'm looking for 55 to 60 on the silver. And, so I was one of the first in the world, and maybe even the first to make the call back in 2010 on around the 15th of September. I put out quite a substantial report calling for $50 in silver by the second quarter of 2011. And as you know, that's exactly what happened. And we not only called a move up, but we called the highs on silver and gold. Twice on the gold, once at 1908 in the middle of the night, and the second time at 1923. No, I didn't honestly know.
You weren't getting much sleep that night, were you, Jack?
I didn't know that the gold was going to go down as much as it did. That was a wake-up call. But it certainly I looked. There was an unbelievable bullishness right at the top. People just did not believe that the gold could go down, and a lot of people were looking for 5,000, if you remember. But this next move is the real deal. This is the real deal, and I actually believe it. I think we've got 4 years. Look, there's an article just came out a minute ago that somebody sent me that is exactly what we've been saying on the show, and is amplifying what you just said, which is, it's hard to believe this, but in 2009, okay, there was a lot of misery and there was zero sentiment on the markets. I mean, people were on the point of jumping out of buildings at that point. The market bottomed and it went up to 2010, came back. 2011 had a very big correction in 2011. And remember, that was when Europe was cratering on the brink. And at that point, the short interest on the New York Stock Exchange was higher than it was in 2009. And you say to yourself, how can that happen when the market already was up for 2 years? And guess what? We just went through the same syndrome in the gold and the silver, where we had record short positions in silver, way off the lows of a couple of years ago, and record short positions in gold, again, way off the lows of a couple of years ago. So it's an identical situation. And to some extent, it's reasonable that the gold move will emulate the stock market by a delay of approximately 6 years. Okay, that's what we're looking at right now. So on the scale of the stock market, we are in 2011 going on 2012 right now on the gold. And what happened from 2011 to 15? We were up 4 years in a row in the stock market in a move that shocked everybody. So I see this next move as being something similar, and a multi-100% move, a couple of 100% to the upside from here should put us up in the 27 to 3,600 range on the gold.
And I agree with you. I have a question though. What do you think the Feds are going to do? You think they'll lose control that they've had over it?
Well, they can't help themselves, because it's like 1979. If they raise rates, to 20% or 21%, it's going to be like throwing gas on the fire. At some point they'll get control of it, but in the same way that they're tolerating a stock market, a runaway market to the upside, a juggernaut of a market right now is it's a norm. It's the norm. It'll be the norm, when we start seeing gold, making record highs every day, just like the news guys did in 1979. They kept saying, gold made another high today, and it was became the norm until it became the mania towards the end. The same thing will probably happen with gold down the road. And, I see real easy parallels. You've got the 2005, the gold bottomed at 425 in the first quarter, and within a couple of years, we were more than double that amount. We were over 1,000. So that's what I see coming for the metals, and I believe it's at the point of liftoff, very, very close to liftoff right now. And I actually believe we're probably going to come in one morning in the coming days where you're going to see a gap higher in gold of probably $10 or $20, $30, and you have to buy that gap, because once it goes, it'll be on a very fast run to 1,400. It'll probably gap through your buy point, and it'll be a really, really powerful run. I think we're in for $100 to $200 on the upside, very quick. Really surprising. Whatever makes that happen.
That's a really good point, John. You got to get nervous around those buy point.
Yeah. And by the way,
that's a really good point.
Check out. This is
you're right. And the way I play it, I would be kind of afraid. Yeah.
One. Look, when I'm putting out a report, it's very hard to get this thing finished, because there's a lot of
there.
There's a lot of pieces to it. There's 40 pages, but one of the things that's going on today that is actually a little bit negative for the market is the Japanese yen has suddenly leapt to life, and so the carry trade that has been fueling the buying spree for the last 3 or 4 years is coming to an end on the stock market, and the yen rising is very bullish for gold. And check out the yen today; it's on its highs, and the gold hasn't really moved yet. But if the yen keeps going up at this rate, there could be a runaway move on the upside.
Yeah, I saw it today.
Yep. And the Aussie dollar is also going up, and the Canadian, which are resource kind of currency. These are very important part of the gold move going up.
I think he's gone, Ed. Ed?
Right.
Okay,
I agree with you. I think the Japanese yen. Pardon me?
I think John's gone, and so I just wanted to let you know to go ahead.
Yeah, sorry.
Can you hear me?
You're back. Okay.
Wait.
Back.
Yeah.
John's back. Yeah, I hear you.
Oh,
Ed.
okay. Okay. All right. When you talk about approaching the key point, when you talk about approaching the key point here, mine was 1385, but if it's around 1360 and it's over 1344, I'm probably gonna, and I'm going to bed at night, and I can see that it looks like over the short term it's lining up to go over that number in a night. I'm going to come in and I'm going to buy, and they'll be expensive at that point, but I'll come in and buy a few options, and maybe I'll time them out. They say they never buy the really short-term options, but if that's what it takes to get them close to the money, I mean, this is kind of ridiculous, the pricing on these options. You're talking about a contract that's a $132,000 contract at gold. You can buy a $1,400 call option for $165 today. Okay, and that's like you've got a contract in there, right to buy it at 1400. 43 days left to expiration. You know, I'll take a look at what these things are doing. If I'm going to bed and I think it's going to break through that number, and I think there's risk that I come in and it's $50 or $100 higher, I won't put a whole lot of money on it, but I will take the shot. And I'll take the shot more than likely in one of the shorter term options things, which are probably willing to lose the money that I put in, but I'll buy some of these options here and I'll go to sleep. The calls. They'll give me the right to buy, but not the obligation to buy.
Yeah, that's a smart
so
idea.
I know my max loss will be what I pay for.
Yeah. Imagine if you'd done that on the
that's
stock market.
That's the way to cover yourself if you think you might not get in.
That's a smart idea. You know, if you imagine if you'd done that,
yeah, right.
You know, on
any time in the last year, the stock market's unbelievable.
Yeah, yeah. That's a great idea. And this is what they're doing right now. Ed. They're buying calls. As a matter of fact, there was a huge buy on calls in the S&P at 2750 a week ago, and look at it now. It's in the money. You know, it was way out of the money then, and look at it now.
Yeah. Yep. Yeah, it didn't take long, did it? I mean, I'm looking at Bitcoin, and it's not broken down yet. I think it's not a coincidence that they started futures trading on it, and it stopped the up move so far. I don't think that's a coincidence. If you read what the CME guy, the chairman, when he said he was going to do it, he wanted to give people a way to short or sell, hedge their Bitcoins and stuff. So that's why they got the contract. I think that's why they got it approved, because they said this will be a way for people to bet against Bitcoin. And I do think the government's somewhat afraid of it. And should they be? I think they really should be. I think because the whole purpose of the thing is to decentralize the financial system. That's the purpose. Anyway, we haven't had a crippling move for the kind of move we had up. So I'm here looking at Bitcoin here, thinking that we're going to come down here and hit the zero line. Even though it's marked it, I expect this to happen. And when we do, I'm going to look for a way to try and get into it. I don't think the move's over yet. I think there's a whole lot to this market left to the upside. But I also think there's a lot better plays in it than Bitcoin, because it's you know, guys aren't going to be so quick to throw their money at something for $15,400 or whatever it's going for. They're not going to do that. You know, I don't think we're going to see that. I'd rather buy something that's cheaper. I'm not going to make any recommendations on it, but there's a few coins that I like. But actually, the only coin I've bought so far is Dwayne's coin. Dwayne, the Christian Trader's coin. That's the only one I've put money into. I have traded the Bitcoin Trust on the stock market, and I have traded in and out of that thing aggressively. That's as far as cryptocurrencies go. My excuse has been it's too hard. There's too much risk. But that's been the wrong decision. What I've decided is there's no reason for me not to take a small piece of my money that I don't mind losing and just learn how to do it. I'm going to have to pay for my education there. You know, you have to in markets. So just so that I will learn. You learn a lot more when you put some skin in the game. And it's not going to be enough skin that will hurt me. So that's what I'm going to have to do. If I looked at this thing, you know, at the beginning of the year, I did nothing. I don't have a good excuse other than I couldn't understand it. But I've learned enough about it now that I understand that any of these exchanges can get hacked, and people have gotten their money stolen on, you know, a lot of exchanges where the exchange didn't have a hack, but they got hacked in their cell phone, and they watched their coins get taken away on their phone, and they couldn't stop it. So I read some horror stories on it. So that kept me away. But, you know, I'm not going to get in on this. You can't. I'm going to have to just
you're aware of the hardware wallets, right? You can take
Yes.
you can buy your crypto and then completely take it offline.
Right.
Okay.
Right. These guys had it stolen out of their wallets.
Yeah.
And they
You're
Coinbase
vulnerable.
is-
As long as you leave it online, you're vulnerable. But if you put it into a hardware wallet and then put that hardware wallet under your mattress or in your safe, then hackers have no way to get at it.
Your hardware wallet being your own key, like your own flash drive or wherever you store the number,
You
right?
have to buy a specific type of external drive that understands
Oh, you do?
cryptography. Yes. The one we've been recommending was the Ledger Nano S, because it will hold both Bitcoin, blockchain coins and tokens, and Ethereum, and pretty much all altcoins, affordably priced.
Yeah. Well, it holds Ripple,
Unfortunately,
XR.
I found out the other day that they have not actually delivered product yet. Their website made it sound as though they were, full steam ahead. They hope
You're
to have,
talking about the Ledger Nano S?
yeah, they hope to have that product to market by like March or April. So that's not going to work for us.
Yeah.
One of our
Yeah, you can speak with authority on that a lot more than me. I'm just telling you what I've found out and all the stupid excuse I use not to jump in.
Right. Well,
I did trade some stuff.
One of our owners did go out and find a very nice cryptocurrency wallet. It's about $60, and it's called the Spartan, and it holds ERC20 compliant tokens, and the CT Global is built on the Ethereum blockchain. It is ERC20 compliant, so the wallet you buy must be ERC20 compliant. Now, the gentleman who bought that Spartan, I don't know if he's in the audience right now. If he is, I would love him to send me a picture of it up close. We could go to their website, and we might do that in a moment, but I expected it. The picture on the web page looked like it was kind of sizable, but when he received it, and it only took him a couple days to get it, he said, "Wayne, you're not going to believe this." He goes, "This thing is the size of a credit card." He goes, "How incredible is it that all those ones and zeros, all those numbers, the addresses, the account, it can go on something this tiny, Pretty amazing. I mean, the Nano S looked small. It looked like a thumb drive with a digital display on it. That's pretty cool. Unfortunately, they're not available to ship, and we were in line to become a distributor for Ledger and the Nano S, which means you'd be able to buy the Nano S from our website, but we're certainly not going to put up ads to sell something that's, who knows how many back orders they have.
Right.
So I'm going to try to contact the folks at Spartan, confirm that will work for those who own the CT Global token, and then I'll see what distributorship, opportunities they might have. And if there's nothing better out there, I mean, from the technology standpoint and the aesthetics and the price, the Spartan, I think our owner made a great decision.
Yeah. Well, hey.
One of the things that I think people should think about regarding Bitcoin, and supports your idea that the price is going to trend down first, is certainly if it breaks this morning's lows, it would look vulnerable. This mining Bitcoin is getting out of hand around the world. There's so many people doing it. It kind of reminds me of what happened in 2000 when Global Crossing, remember, which was that, the sort of king of the of fiber, transatlantic fiber.
I remember this. I know people who are involved with this company.
Right, and so the whole thing is, they basically the whole telephone market got flooded with fiber, and of course all the profitability went away, and all these companies went under, and the Bitcoin thing is probably sustainable. The mining deal is sustainable or cost effective at current price. But if we start going back below 10,000 and go down into the 5,000 zone or whatever, a lot of these companies could go under because they can't sustain themselves.
Right. But won't that in the long run decrease the amount of coins available?
Exactly, and that's in other words, the supply is going to start to, adds another layer of selling to the Bitcoin. Look, you got the top 10 Bitcoin founders who own anywhere from 100,000 to 1 million Bitcoin, right? That's an unbelievable weight on top of the market.
Yeah.
Then you've got this, more and more Bitcoins being produced, and if that ultimately may, these guys, they're going to have to sell their Bitcoins, as they mine them, because they gotta eat, they gotta pay the bill.
That's their cash flow.
Exactly.
Yeah.
So
that's a good point, though, John. If that will decrease supply, so when prices are low, and so that's kind of how the commodity markets work.
Right, and these you saw this run up in Kodak a couple of days ago.
I heard about it.
You had the GBTC, which is one of the kings probably the king of the Bitcoin stocks. We sold that at 34.55 twice.
Wow!
And it's down. Well, it went all the way down to 1,100, and we bought it just to cover in reverse, and went all the way back up to about 24.50. But we sold it again, and now it's down to 18.25. Actually,
that's what I've been trading, John. I think it's interesting. The risk is high overnight because you don't know what the crazy thing's going to do, and you can't trade it.
Yeah. But the two or three of them. Look, the UBIA got suspended. Okay, that's suspended at 22 after being at 100. That's probably going to open $10 lower when it comes back on later in January. That'll drag GBTC down and probably Riot as well, which is also falling right now. So, and that's come from 45 down to 20. Look, it might hold. It might make a double bottom here. It might be a bit of a rally if Bitcoin goes back up. But if Bitcoin falls from here, I think these stocks are doomed. These two stocks are doomed.
Yeah, they're definitely going to be affected by it for sure. I got in at GBTC around $860.
Well, you're all smarter than that. Was an incredible call. Well done. That's amazing.
Well, I just decided I had to get in. That's the way I was going to learn about this market. I could do it in my IRA, and I decided to do it that way. But I think the altcoins are the key to making money, and I'd love to see them get sold off hard here, and that's when I'm going to buy the real cryptocurrencies, outright. But I'm going to be patient for it. I've been patient this long and missed the easy one, so I have to be a little more picky at this point, because you can see the potential here of Bitcoin could drag them all down for a while.
We might be, as I said earlier on, we're a little bit frothy in the market today. I noticed the Nasdaq starting to come off the highs here, which we called a short while. We actually put a sell out at 67.10. It's down to 67.03 and we put an additional low sell. Now, whether it reverses here, we have a buy stop above the market, but if it doesn't reverse and it keeps going, it could potentially drag the market down a bit. And I noticed there's a little bit of a sell signal developing on NVIDIA. Apple is vulnerable to, because this, what could cause problems for the market is when the earnings start coming out. If they start selling off on the earnings, on good earnings, that will be a problem for the market. And if Apple disappoints, that would be a big problem for the market too. Because I think there's a little bit too.
The market's looking for a reason to pause as people don't get in here, and I think they're looking for that. It would probably be welcome to a lot of people, because it's been really hard for people to buy if they just didn't make a decision and buy.
Mm-hmm.
So, yeah, it could happen.
Well, right now the Japanese yen is really really soaring today. It's up very strongly, and that's helping gold, which is pushing the 1324 right now. And the silver put in a sort of a good test this morning, and it's hanging around. But I think when the silver breaks 1705, that could be the beginning of a pretty fast up move.
1705. Well, yeah, I haven't been trading silver lately. I owe silver. Well, I'm gonna have to run here, guys. It's been fun.
All right, Ed. Well, we've enjoyed having you, as we always do. I try to just stay in the background and let you talk. You too.
Yeah, it was great show, great presentation, Ed. Well done, excellent.
Thank you, John. You too.
Okay.
Okay, guys. Talk to you later.
So it's 2 weeks from Thursday?
Yeah, sounds
Okay.
good, Dwayne.
All right, and you've got your certificate, and let me just say this. Well, I better say it differently. Somebody I know banks at Frost Bank, and we received their payment, and they received their certificate. Someone else banks with Frost Bank. They sent a check in the amount of, I can't say, but we have been unable to identify the person who sent that check. So if you bank with Frost Bank and you don't have a certificate, or if you bank with Frost Bank and somehow you have your certificate, would you please let us know? Because we had 2 payments from Frost Bank. One was somebody's name I won't mention, but we've got a mystery guy. And I wonder if that person has checked to make sure he didn't get charged twice.
He's checked.
You think he has? Okay. All right.
I think he's checked.
Okay. All right. All right. Well, we're just trying to be, out of all that's happened in the past, we just got one right now with a question.
Yeah.
Maybe a second. So, all right.
Okay. Listen, thanks very much, Dwayne.
Great day. Thank you,
great
sir.
to talk to you, Ed.
Okay.
Great 2 weeks. Look forward to catching up with you. Thanks.
All right. And,
sounds good. Thanks. Bye.
Ed, 2 weeks.
Yeah.
We'll see you right here,
Yeah.
same place.
See you then, Dwayne. Okay.
Same bat channel.
Okay.
And I'll mute your mic. Oh.
You can take your screens back, right?
Yes, I can. Hey, how about those weekly trading zones? Did you have a look at the S&P?
You talking to me?
I'm talking to you.
Oh, look at that. Yeah.
Yeah, I used to do that you talking to me thing a lot. It was like a shtick, Actually, it became like a tick, but... And then I saw Robert De Niro the other day on TV, slamming America and the president and everything else.
Oh, yeah. Yeah. These guys live in the wrong country.
I'll never watch Taxi again. I mean...
Yeah.
Is that what it was called, Taxi?
I think so.
You talking to me? You talking to me? This guy was a great actor. He was, no, that was Al Pacino, that was Scarface. But De Niro, I mean, he's in that song, Empire State of Mind, because Jay-Z lives in, not Soho, but somewhere else. He lives in Tribeca, right next door to De Niro. And he gets to sit down front at all the basketball games, like on the court, because he's Jay-Z. You ever heard that song, Empire State of Mind?
No.
You should YouTube it. You Want the One. The song was originally done by Alicia Keys, but then they did another version where Jay-Z comes in and kind of lays some rap on the song, and then Alicia hits the chorus. There's a little bit of language in there, but he's telling a story of what his life was like. When he used to sell dope up in Harlem and where he copped, and he did business with the Dominicans, but now he lives next to De Niro, and he's sitting courtside, and, he's a little bit boastful. Yeah. All right. But just listen to it once. And if you can keep from listening to it a second time, on Thursday's show 2 weeks from today, I will eat your hat. You just have to mail it up to me.
Okay.
On live
well, I don't
radio.
have one, so don't take it personally.
Okay. Well, I'll eat my hat. All right. I'll get a small beanie. All right. Take care, brother. Okay. Oh, it was Taxi Driver. That was the name of it.
Okay. Yeah, that was an old show. I remember it.
Yeah.
I don't think I ever watched it. I remember it.
All right.
Okay. Take care.
Talk to you
Bye-bye.
soon, man. Thanks for everything.
Bye.
Okay. All right. Guys, let me run through these markets real quick. When I measured it earlier, now I put up the email so that everyone would have an opportunity to grab a screenshot. So there's one more chance. 5, 4, 3, 2. Okay. We said on the S&P, consider buying 27.55. Now, there was a zone here, consolidated for 1-2 hours, then took off. That's how it works. You get to the zone, you consolidate, and basically, price is taking the temperature of the market. How many sellers I got here? How many buyers I got here? And after a period of time of rest and meditation, price says, we got nowhere to go but down. And there it goes. So when you're able to catch that moment in time when the market changes its mind, like here, and here, and here, and here, and here, and here, and here, you know, things become different. They never become easy, but they start to become simple. Now, we've taken out this previous high, new all-time high, beautiful little doji up there, kind of textbook. Remember what we talked about yesterday? I drew the little diagram. I used to do that every day, but I know people get tired of it, so I don't draw it every day now. But I drew it, and then we ended the show, and then what happened? Broke through the zone, pulled back to the zone to confirm good support, and then made a nice run from 49 to 54 plus. That's 5 plus S&P points. Then what did it do? It really came back, tested to make sure it was good support, and it ran up. It did hit the zone here, consolidated for an hour, 2.5 basically, and now it's run up here. Potentially that is the high of the day. Okay, with this long climb and this doji, this might be it for today, but it doesn't mean that based on the news we have coming out tomorrow morning that we could see this. This is the highest weekly trading zone. We certainly don't expect it to close above 78. We expect it to close at 78 and below tomorrow, last day of the trading week. Now, so it made a move, came back, tested, off it went. Consolidation, made a move. Is it going to come back here? Well, what do you think? And this is what I asked you yesterday, is which way you thought price was going to move after it finished this consolidation here. Needless to say, I was a little depressed by not the inaccuracy of the answers, but the lack of the answers. At this point, if you've been following the radio show, even if you're not a partner, if you've just been following the radio show for a period of time, I would hope that would be obvious to you. If it's not, go to the mentoring page, sign up for a free mentoring session, and let me see if I can help you just a little bit. Okay? I'd love to do that. I just need you to give me the opportunity. Okay, so if we take this last full leg up here, okay, from the low to the high, the 24% retracement is right at the weekly zone. Remember, that was a top, that was resistance, and then it wasn't. So as we pull back into this area, top, we got this top, we've got this 24% Fibonacci retracement, and we got the weekly trading zone. The potential for this area to be good support is extremely good, and in my opinion, and that's what it is. It's my opinion. So it comes back. Maybe it comes all the way to the zone. Maybe it doesn't. Okay. But it pulls back. Once it's confirmed good resistance or significant buying, then we get another leg, and we would need that leg to take us, let's say it pulls all the way back to the zone 58. We're talking about a 19-point move to the next zone overhead, which is almost $1,000 per contract on the S&P. If you're trading 10 contracts, it's 10 grand. You can't trade 10 contracts, though, until you earn the right to trade 10 contracts. And I'm way over, and I'm late for a meeting, and I got to get out of here. Goodness gracious, I wanted to run through all these different markets with you. We had a good day in almost everything. Gosh, there's gold. It wasn't a huge mover and shaker. There's some movement on the soybeans. NASDAQ, we had a $160 move, a $400 move. Russell, we had an initial, nope, we just had a move up $1,000 per contract on the Russell. Now, we never get out at the swing high or swing low. It's important. We trail our stop, so you're always going to leave a little something on the table. Dow up 50 points. That's 50 points was available per contract by 25,450. And then there's gold. No, we never looked at the bonds. On the bonds, it was by 150.17. 150.17, which happened about right here. So far, there's only been about 3 ticks available. In that trade, we also said if you get the opportunity on bonds, you would want to sell 149.17. Okay, and 149.17. The swing low of this candle was 149.17. Remember, we had the discussion the other day. Somebody said, should I buy right at that number or like 1 tick below? I said, well, it was designed that you sell at the trigger number, but there's been many a time that I've seen price come down, touch the important price, important area right on the nose, and then run the other way. What are you going to do? You know? And so, if you had in an order to sell the bonds on a stop at 149.17, you might have got stopped out. True story. Now, this 150.17 business seems to be climbing, although it's pulled back already. Now, again, if you're new, I don't recommend you trade bonds. There's too many other things you can trade that just don't have all the difficulties. So again, gold, the Dow, the Russell. Big day on the Russell, $1,000 per contract. In Q, okay, we looked at that. The only thing we haven't looked at is crude, right? Crude, $1,000. Well, the first move, $300 per contract available. We then pull back to what? Test the important price, important area. And then what do? Run up $1,000 per contract. And then what do? We pull right back to the important price, important area. Once, twice, thrice. Important prices, important areas are almost always tested. Okay? Keep that in mind. Wish me well as I wish you well. And let me just say this. Thanks for tuning in. Oh, partners meeting tonight. If you've been on the trial and you want to be in the partners meeting, you have to become a partner. Call Michael 949-423-6464. 949-42-EMINI. He will get you signed up so that you're an official partner and that you can be in the workshop tonight and begin your 90-day mentoring program. Okay? There's still time for you to take care of your end and for us to get you out your credentials, your login, your password, everything that you need. Okay? And those weekly trading zones that I was going to go over with Ed, but I realized I was out of time. I mean, if this would help you to have this information before the market opened for the week, you really should look into it. Okay? You can go back and look at charts. Google CFRN weekly trading zones, read all the articles, look at all the charts up at the top where it says images, and then pour over our blog. Go way back. Go all the way back to December 14, 2009 and walk forward. You'll see that the zones and price interact exactly as they have for the past 8 years. And as I look back in history before I started to create the zones, had I had the knowledge back then, it would have applied then the same as it does now. So, with that said, again, thank you so much for tuning in today. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.